Okay, well, I would like, first of all, thank the Berkeley Initiative for Transparency in Social Sciences of the Center for Effective Global Actions that is based on US Berkeley's campus, especially of this Eduard Miguel, the Scientific Director, and Grace Hahn, the Program Manager, for the invitation to this panel of the 2023 BITS annual meeting. Unfortunately, for work reasons, I couldn't travel to the event, but I am happy to be able to be online today. We have a 5 hours difference with you, so it is 3 p.m. in Santiago. As you may know, the two most important reforms that the Chilean government is carrying out nowadays are the tax reform and the pension reform. The tax reform's objective is to be able to increment social spending to promote a more social cohesion with fiscal responsibility. As reference, we still have a significant gap in tax burden compared to OECD countries. The pension reform, on the other hand, is responding to years of demanding better pensions in Chile in a context of a highly criticized pension system, as David pointed out, that has created great concern in our society, causing fear and mistrust. The reform now proposes to incorporate a new component in the contributed pillar of the pension system. It's a new contribution from the employers to create a social insurance financed through a collective capitalization fund. These represent a different stance compared to the individual capitalization system currently in place. The social insurance allows to increase pensions today while saving for future pensions, allows also to close gender gaps in terms of maternity, care work, and age expectations, and incorporate a retributive instrument that introduces solidarity in the pension system. There are two key issues regarding the reform that could be of economic concern. First, the long-term economic sustainability of the social insurance, and second, the economic impact of the reform in several markets, in labor markets and capital markets mainly. Among others, such as the fiscal impact of the reform due to the rise in amount and coverage of the universal guarantee pension. So given the years of discussion and the fact that 3 bills have already failed to pass in Congress, our government was fully committed to social dialogue and technical robustness of the pension reform. In fact, 7 months before the introduction of the pension reform bill, we carried out tripartite dialogues with citizens, workers, and employers. Also, we produced several technical reports in which we evaluated the main technical concerns to help clear up the political discussion. Let me briefly describe the context of these reports. First, the financial report, which is a mandatory report that measures the impact of the reform on fiscal budget and is prepared by the Budget Office. This report uses mostly public data from the Internal Revenue Service and administrative data also from the IRS. Second, the regulatory impact report. It is known as the productivity report and analyzes the labor market and the pension reform's short and long-term effects and analyzes the capital market effects. The model is a general equilibrium model overlapping generations developed by the Central Bank of Chile to evaluate the pension reform in 2017 and it uses public data from the household surveys and administrative data from the pension data and central bank data. Third, and maybe this is the most important one, is the Integrated Pension Fund Sustainability Report, which seeks to evaluate the financial sustainability of the new pension fund created by the reform of the social insurance. Uses actuarial modeling developed by the Budget Office, which is based on a macro simulation of the labor market that uses data from administrative resources, such as the superintendents of pensions and public data from household surveys as well. After these reports were known by the public, nearly 22 think tanks and research centers raised the request for the government to provide further information necessary to understand and replicate the reports. Thus, we agree on a process of 3 steps to help to understand the reports, the methodology, and the data we use. In the first step, we organized 3 workshops where we explain the methodology used, the model, the data we use, assumptions, and the parameters for the estimates of the different models. We explain the details and answer all questions. There were nearly 60 people present on those days. In the second step, we permit access to data. The Pension System Oversight Board, or the Superintendents of Pensions, published an updated sample of the database that were used in the Integrated Pension Fund Sustainability Report. And in the third step, we produced 2 documents, README documents, that were produced by the Ministry of Finance. One to reproduce the regulatory impact report, and the second one to reproduce the Integrated Pension Fund Sustainability Report. Also, the Central Bank of Chile published a working paper with the details and the mathematics of the general equilibrium model overlapping generations to implement in a statistical software. There are further steps still. First, to update the README files, and also to develop a Python code for the Integrated Pension Fund Sustainability Model in order to make it available to the public in the medium term. Finally, the Minister of Finance and the Pension System Oversight Board have island computers with a full administrative data sets to allow researchers to bring their models and estimate more precisely economic effects of the pension reform using their own parameters and assumptions. With the information already available, think tanks and research centers can develop their own models and replicate the estimation about economic effects of the pension proposal. As final remarks, I would like to say Chile has taken over the years steps towards transparency and public policy. In 2003, an agreement between the Ministry of Finance and Chile Transparente to improve the procedure through which the state makes purchases from private. In 2006, the former President Michelle Bachelet called to an expert commission to elaborate the probity agenda. In 2013, we created the first political party index for transparency. In 2015, the Practical Guide to Law 20,730 that regulates lobbying and the management of private interests was launched. And last year, we approved a law that modified the tax code, forcing banks and other financial institutions to provide information on balances and amounts of payment in financial accounts to the Internal Revenue Service. Finally, the tax reform includes the creation of a national registry of final beneficiaries. This government, the government of Chile and the government of President Gabriel Boric, is committed with transparency in public policy because we believe that it helps to build confidence in democracy and democratic institutions, to bring public policies closer to citizens, and help to build a more socially cohesive society. Thank you very much.